What I'm about to share with you is the exact reason why systematic investing beats emotional market timing every single time. While I was on vacation in September, my pre-planned systematic approach delivered 3 perfect option trades generating over $300 in income. Caught Intel's 23% explosion after the Nvidia partnership, and positioned perfectly for the Russell 2000's first record high in 4 years. Today I'm pulling back the curtain on exactly how this systematic framework works, why it captured opportunities that most investors missed, and the specific trades I'm targeting right now as all 4 major indices hit record highs simultaneously. For the first time since the pandemic recovery, if you've been wondering whether there's a better way to invest than constantly second-guessing every market move, this video is about to change everything for you. It's a perfect setup. When markets hit record highs, let me paint the picture of what September 2025 delivered. Something we haven't seen since the pandemic recovery. All 4 major U.S. indices achieved record highs within the same trading week. The S&P 500 hit 6,631, marking its 47th record high of 2025. The Dow crossed 46,000 for the first time ever. The Nasdaq maintained tech leadership at 22,470. And here's the kicker. The Russell 2000 finally broke its 4-year consolidation pattern, hitting 2,467 for its first record since November 2021. But here's what made this even more remarkable. While markets were celebrating, investor sentiment told a completely different story. The AAII sentiment survey showed bearish sentiment at 42%, well above the 31% historical average. The bull-bear spread was negative, sitting at minus 0.69% versus the positive 6.38% long-term average. This is exactly the kind of contrarian setup that systematic investors live for, markets making new highs while investors remain skeptical. Meanwhile, the Fed had just delivered their first rate cut since December, dropping rates by 25 basis points with Chair Powell projecting 2 additional cuts by year-end. Historically, when the Fed begins cutting rates within an easing cycle while markets are at or near highs, the S&P 500 averages 15% gains over the following 12 months. The Intel Masterclass. Systematic positioning pays off now. Let me show you exactly how systematic positioning works in real time with my Intel trade. Back in August, I established a position in Intel around 2355 to 2386, while everyone else was writing the company's obituary. The stock was trading like a has-been, beaten down by the AI revolution narrative that said Intel was irrelevant. But my systematic analysis saw something different. Intel had U.S. government backing through the CHIPS Act. They were streamlining operations under new leadership. Most importantly, they were trading at a massive discount to intrinsic value. While others focused on quarterly earnings disappointments, was building a position based on systematic value metrics. Then September 18th happened. Nvidia announced a $5 billion strategic investment in Intel, acquiring approximately 4% of the company at $23.28 per share. But this wasn't just an investment. It was a comprehensive partnership for co-developing AI data center and PC chips, with Intel providing foundry services and Nvidia contributing their NVLink connectivity technology. Intel stock exploded 23% in a single day to $30.57, marking its best performance since 1987. My systematic positioning captured this entire move because I was positioned before the news, not chasing after it hit the headlines. That's the difference between systematic investing and reactive trading. It's perfect options execution, income while away, but the Intel win was just one piece of a larger systematic success story. While I was on vacation, my pre-planned options strategy delivered perfect 3-4-3 execution, generating $306.99 in income with zero management required. Let me break down exactly how this worked. First, I had sold IREN $17 puts, expiring August 29th for $111.33 in premium. The logic was simple. This strike was 10% below my equity entry price, providing double layer protection. IREN's strength kept the puts out of the money, and I captured the full premium. Second, I sold Palantir $145 puts expiring August 22nd for $133.33. But Palantir's strength above 145 allowed full premium retention. Third, I sold Russell 2,220 puts, expiring August 22nd for $62.33. The timing was perfect. I sold these puts just days before the Russell breakout to new highs, making the 220 strike completely irrelevant. This demonstrates the power of systematic options income generation. These weren't speculative bets on market direction, they were probability-based trades with 80% plus success rates, executed on assets I was willing to own at those prices. The Russell 2000 breakout, small cap leadership returns. The Russell 2000 breakout deserves special attention because it validates a systematic thesis I've been building for months. This wasn't just a technical event. It represents a fundamental shift in market leadership that most investors are still missing. Here's the historical context that matters. My research covering breakouts since 1980 shows that when the Russell 2000 hits new all-time highs after 12-plus months of consolidation, 10 of 11 instances saw S&P 500 gains 12 months later, with average returns of 15%. We're potentially looking at one of the most reliable, systematic setups in market history. The fundamental drivers are compelling. Small caps benefit disproportionately from Fed rate cuts because they carry more floating rate debt. They're trading at an 8% discount to historical norms versus large caps. In Russell 2000, earnings are expected to grow 69% year over year in Q2, absolutely crushing large cap growth expectations. While everyone remained fixated on the Magnificent Seven and large cap tech, I had systematically positioned for small cap outperformance. The Russell 2000 is now up 10.7% year to date. And this breakout suggests we're just getting started on a potential 12 to 18-month period of small cap leadership. Monday's strategic setup, where I'm positioning now. So what does this all mean for your investments right now? The systematic approach is identifying several compelling opportunities that emotional investors are completely missing. First, small cap momentum has serious follow-through potential. The Russell 2000's clean breakout above 2443 resistance with volume confirmation suggests 8 to 12% additional upside over the next 2 to 3 months. I'm implementing this through IWM ETF positions and individual small cap leaders with strong fundamentals. Second, Intel's consolidation after the Nvidia partnership creates a strategic entry opportunity. The stock is currently trading in the $28 to $30 range after surging to $30.57. Any pullback toward 26 to 27 levels represents an excellent scaling opportunity as partnership milestones develop over the next 6 to 12 months. Third, rate-sensitive sectors like utilities and REITs are positioned perfectly for additional Fed cuts expected in November and December 2025. Sectors are trading below historical premiums to risk-free rates, while offering 3 to 4% yields that become increasingly attractive as rates decline. Fourth, the Intel-Nvidia partnership validates AI infrastructure as a broadly profitable theme beyond just the headline names. I'm focusing on companies with direct revenue exposure to data center buildouts and semiconductor partnerships rather than tangential AI claims. The systematic advantage, why this approach works. Here's the key insight that separates systematic investing from everything else. It removes emotions from decision-making by using probability-based frameworks and disciplined risk management. While others were debating whether record highs meant we were at a top, my systematic approach was executing predetermined strategies based on historical patterns, fundamental analysis, and technical setups. The September results prove this approach works across different market conditions. Perfect options execution generated steady income regardless of market direction. Contrarian positioning in Intel captured a major partnership catalyst. Small cap positioning caught a historic breakout that most investors missed. And sentiment analysis positioned for strength, while others remained skeptical. This isn't about being right all the time. It's about being systematically right more often than you're wrong, with position sizing and risk controls that protect capital during inevitable losses. The combination of systematic positioning, disciplined risk management, and contrarian sentiment interpretation creates sustainable wealth building during all market conditions, especially when emotions and fundamentals diverge as dramatically as they do today. Your next steps. Join the systematic approach. If you want to stop being a reactive investor and start building wealth systematically, I want you to subscribe to Warren's Money Buffet on Substack today. My free newsletter gives you the systematic market analysis that most investors never see, helping you think like an institution rather than trade like emotion. But if you're ready to see exactly how I'm positioning my actual money, the specific entry points, position sizes, options, strategies, and systematic frameworks, upgrade to my premium newsletter. You'll get real-time trade alerts, detailed systematic analysis, and the exact probability-based decision-making tools that delivered September's perfect results. But more importantly, you'll join a community of systematic investors who understand that consistent wealth building beats emotional gambling every single time. September 2025 was just the beginning. The systematic advantage continues, and the setup for the final quarter of 2025 is looking exceptional. Don't let another systematic opportunity pass. You buy while you restuck, reacting to headlines and second-guessing every market move. Subscribe to Warren's Money Buffet today. The systematic approach is waiting for you, and the markets are setting up for the next major systematic opportunity. Thanks for watching, and I'll see you in the next video.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.